You are listening to chartingwealth.com for Tuesday, the 20th of September, 2016. Thank you for the 10 minutes you're giving to us. It will pay itself back in spades if you will stick with it. Now, let's jump right into the market, see what's going on. IYY is the iShares Dow Jones U.S. Total Market Index Fund. It tracks the entire market. We have, and again, when people ask me, you read my writings, you see that we talk about the importance of trend lines. If I had only one thing I could do on a chart as a trend line, I would use it. That's it. Trend lines are the key. What do we see going on with our trend lines? Well, we have a weekly trend line in yellow. It is being bisected by a two-day trend line going down. We're in a confirmed down move on both the total market index fund weekly chart and the total market index fund two-day chart. Now the last 4 days we have two candles, one an up candle ending on the 15th of September and then ending on the 19th of September. We have a spinning top, a green spinning top. All of those movements are well contained in the down, big down candle on the 13th. That's ending on the 13th of September. So we're in a confirmed down move. We have sideways slippage going on right now. Do not forget, if you did not listen to our weekly review and forecast, give you a heads up. Wednesday is a big day in the market. The Federal Reserve is going to end its Federal Open Market Committee meeting and be making announcements about what is going to be going on with the interest rate. I guess the top money is on them doing nothing. What will that do? Well, it could cause the market to soar. That price could already be built in. We don't know. We're paying close attention, making sure that as we go through that event, we don't let ourselves get screwed one way or the other. If you've already made money in this big down move, you might consider cashing out some of that again with your virtual trade. We're not a stock calling service. We're an education firm. We don't give market advice. We do want you, however, to open up a virtual account at any of the online brokers and start learning how to buy and sell. It's not that complicated, and it's very important for you to know how to do it. So let's dig a little deeper into these charts and look at what's going on in the 4-hour chart. Now again, we looked at the 2-day, we have the weekly trend, the 2-day chart we were just looking at, and the 2-day trend in blue. What do we see going on the 4-hour chart? A backup is underway. In other words, it has swung over going up. Now, if this is a strong enough move, it'll actually pull the 2-day chart into an upward move, but that hasn't happened yet. And in fact, the movement over the course of Monday did not end above the 2-day trend line. So we'll continue to pay attention. If this starts to roll back over and crosses over going down on the MACD, that is what we look for as an entry point. Why? Well, we look at an entry point going down on a down move, not an up move. And again, if you understand inverse funds, you understand that you can make money when the market goes down because inverse funds go up. What do we see going on? Well, we're below the 2-day and we're below the weekly and we're below the 2-day trend line. They're both going down, confirmed down moves on both. And remember, the market tends to move in the direction, all things being equal, of the biggest chart. We have two big charts, the 2-day and the weekly, both down. So if the 4-hour chart rotates over going down, we hope we can find a good, safe entry point and to ride that market further down. Now let's move a little quicker. When we look at the S&P 500, which is going to look somewhat similar to the total market, it also is down on both the weekly and the 2-day trend lines, confirmed downs there. Crossed over going down on the 2-day chart back on the 24th of August. So again, strong down moves. How is that chart backing up? Let's see if indeed it is. On the 4-hour chart, tried to cross over backing up. The MACD has not crossed over yet, but the derivative oscillator has gone in the positive, still below the 2-day trend line, so pay attention. Depending on how risk averse you may or may not be, how much you've been practicing, how much you know you can or cannot rely on the derivative oscillator, you might be looking more to that. The backup has already taken place on the morning candle as far as just the Heikin Ashi candlesticks go. So continue to pay attention. But again, we don't have a confirmed backup at this point, not like we saw in the total market. On the S&P 500, we don't. Okay, now let's go back to the 2-day chart. We're going to move on. Oh, and for the record, the total market down 0.10% for the day. S&P 500 up 0.02. So again, 0.02, just barely up. And the Qs down, that's the NASDAQ 100, down 0.43% for the day. Now, again, we're still in a confirmed down move. The MACD has not crossed over going up. Derivative oscillators still very much negative. And we see the signal line and the MACD continuing to move down. However, we do have two 2-day candles with strong up movement over the last 4 days, candle ending the 15th and then the 19th. Now, again, let's take a look at our 4-hour chart and see what we see. Well, the 4-hour chart started backing up with that up move back on the 15th. And again, moved down toward the end of the day. If we have a crossover going down on the Qs, you may very well look to jump in on that 4-hour chart. So be paying attention to that. Also be wary. We do have Wednesday coming with that Fed meeting. Oh, and also one important thing to remember is that the MACD, the QQQ, the NASDAQ 100, is still in a confirmed up move on that biggest chart, the weekly chart. If I recall correctly from yesterday's broadcast, yes, it hasn't crossed over going down yet. So just keep that in mind. It might make you a little more trepidatious in dealing with down moves on the Qs. Now, lastly, we're going to go to gold. Gold was up 0.21% for the day. Gold is actually a confirmed down move. It is moving down, has been moving down strongly over the last 6 candles on the 2-day chart. Let's take a look at what happened with the 4-hour chart. We saw some up movement in the morning, capped off by some down movement in the afternoon. We haven't had our backup yet there, although those of you who like to use the Heikin Ashi to look for backups, you may have found it occurring. Might want to check that out in the morning and just see what happens. Be aware that gold is below the 2-day trend line at this point. Folks, that's where we ended the day with trading on Monday, the 19th of September. It's good to be back with you. We enjoyed our 2-week hiatus. We are back in full. Going to be working on getting that 3rd chapter of our book up to you very soon. We'd love to hear from you. Write us at go to chartingwealth.com. Let us hear from you. If you'd like to receive our daily newsletter, you need it. And what you get when you get it is, of course, our daily market review in video. In addition to that, you will get our How to Read a Stock Chart video link to that 15-minute video that will help you immensely. In addition, you'll get the link to our PDF file that is actually our daily review, and you'll get our layout for our freestockcharts.com layout that Charting Wealth has. Now, if you want to help us out, go to iTunes, subscribe to this podcast, give us a 5-star rating. We so appreciate that. And go to YouTube and subscribe to our channel. We've already hit the 1,000 member mark. We so appreciate that. We'll now be able to start giving you proprietary broadcasts. Thank you for everyone who participated. Let us hear from you. So good to be back with you at chartingwealth.com. God bless.